Hello everyone, George DeSantis here with the look of the market for the week ending April 15, 2016. We'll start off today again as we usually do by looking at the monthly chart of the S&P 500 to get the really big picture of the market. So on the monthly chart now, what we see here is that the parabolic has been hit by the most recent bar, which is of course the month of April. So, and we are closing at the very top, close to the very top of that bar. So this is pretty bullish. The bar is also above the instantaneous trend line, and as I mentioned a week ago, the Kalman filter is poised to close above the instantaneous trend line should this uptrend continue, the trend we are experiencing since February 11th. Now, in the middle of the chart, MACD continues to trend up. The histogram is shortening up month by month, well, for the last 2 months. And at the bottom of the chart, Elder Force, Alex Elder's Force Index, which I plot as a 13 period or 13 month, even though it says 13 days here, but this is a monthly chart. So right now we are still above the zero line and we are trending up a bit here. So all in all, this monthly chart continues to look poised to give us a switch to an uptrend on the longer term dimension of the market. So let's take a look at the weekly chart. On the weekly chart, as we see here, the S&P is seemingly finding support at the 2046 level. You can see this level right here. So these last 2 weeks, we've managed to stay above that 2046 support resistance line. What we are actually facing here now is this trend line, which is at about 2090, 2095 or 2096, somewhere around there. In any case, this is the next resistance level. This market is looking pretty bullish still. Many will say it's overbought, but you know, markets can remain overbought for a while when they're trending up. So I don't think there's any need to get bearish here. The Kalman filter is still below the most recent bars, especially this bar, last week's. The instantaneous trend line crossed above the Kalman filter crossed above the instantaneous trend line and still remains there. We had a bullish Harami here. We had another bullish Harami here, these two bars. And now we have what might be considered a bullish engulfing candlestick, because this body of this candlestick is just about completely engulfed by the body of this candlestick. So that's pretty bullish. When we look in the middle of the chart, RSI 12 is still above the 50% line. It is sitting just at the 60% line, and that's pretty bullish. The trend is still up, indication that that is so. MACD continues to trend up above the zero line, and at the bottom of the chart, Williams percent R is showing a great deal of strength of the momentum of this move, this uptrend, since it's now above the 80% line. So in addition to what we saw on the monthly chart, meaning that it's looking as though it's poised to become decidedly bullish, this weekly chart, the intermediate term trend, is looking very, very bullish. Certainly we are bumping up against resistance, so we can see some resistance and maybe a bit of a retracement. But right now, I'm on the bullish side. Let's take a look at the daily chart. Here's one of the daily charts that we looked at before. It is that chart that has the 9 EMA and the 30 weighted moving average. In case, you know, most of you might be using software like TC2000 or freestockcharts.com, and if that's the case, you would have to use the 930, I suppose, because you don't have the instantaneous trend line there. So it's now showing us that the 9 is still above the 30. Since we closed below the 9 here and again here, we had this move up. So that is pretty bullish. We are still in an uptrend. RSI on this daily chart is still above the 60% line. So that's pretty bullish. The Williams buying power remains above the zero line, so that's bullish as well. And percent R at the bottom of the chart, Williams percent R, is showing us momentum continues to be strong. The momentum of this uptrend, it's still above the 80% line. So that's one of those daily charts we look at, and it's still looking pretty bullish. Let's take a look at another chart. Here's the other daily chart of the S&P 500 that we've examined before for some weeks now. First thing we notice is that even though the Kalman filter seemed to have dipped below the instantaneous trend line here for a few days, it quickly recovered and is now above the instantaneous trend line once more. The parabolic is still below the most recent bars, so we have parabolic still showing us there is no indication to reverse this to a downtrend. In the middle of the chart, we have Jerry Appel's sum of the rate of change indicator, and that went through some pullback here, as we saw indication up here. So we got a little break of the 4% line, and now we're back above it. So that is telling us we should be in this market. Well, at least in the S&P if we're doing the index. But you got to look at your individual stocks as well. MACD is trending up from below the zero line. It is slightly below the zero line now at minus 0.92. And at the bottom of the chart, just as we saw before, percent R is in bullish territory with an indication of that there's a lot of momentum to this move. Momentum is pretty high. Let's take a look at another. On this daily chart of the Nasdaq of the S&P, last week I calculated the retracement levels to look at some symmetry or possible symmetry here. And what we found was that the average pullback was about 40 points. And of course, we had a number of 41. And since then, of course, as we know, the market found this as support level here and moved up. So we'll see how that continues to play out. Let's take a look at something else. Here's a daily chart of the Nasdaq. I use this for entries and exits when I trade the Nasdaq. And of course, we had a whipsaw here, so we had to get out. I had to get out here and get back in here. So then I trade TQQQs or just the Qs. But right now, you can see that the Kalman filter bumped off the instantaneous trend line and went up again. And the parabolics are situated below the last two bars, Thursday and Friday. The sine wave indicator is very irregular. And of course, as I mentioned, Jerry Appel's sum of the rate of change indicator is now bullish again because it's above the 4% line. We'll see how this continues to play out, but as of now, I'm back in the Nasdaq with the Qs. This chart is from TC2000. It's a daily chart of the S&P. And what I wanted to do here was to plot the Fibonacci extensions. So from this point here to this point here, the next Fibonacci extension to come into play would be the 1618 extension, and that would bring us to 2236.90 on the S&P. In order to get there, though, we've got to get past this 2100 level. So should we get past 2100, this comes into play, this 2236. That would be a very nice move. I wanted to show you this chart so you could see where the Fibonacci extension, the 1618 is. Here's a weekly chart of the S&P 500 on stockcharts.com. So what we talked about last week was the fact that we had a spike down. Remember that? We spiked down in an uptrend. This is a buy signal. When you spike down in an uptrend, you should be buying the instrument, whether it be S&P or an individual stock. And sure enough, the bar is once again green on the weekly chart. So we're permitted to hold the index, or if we also have green bars on our individual stocks, likewise we could hold them at this point. We have permission to buy if we get green bars. That's the whole idea with the impulse indicator here. MACD, of course, is trending up, and the volume has picked up a bit. So this is the weekly. Let's look at the daily. On the daily chart, the bars are once again green. We had those red bars last weekend, remember? And now we had those 4 green bars. So we are permitted to buy on the daily and the weekly chart, to be buying the index, whether we do spiders or the SSO or whatever the ETF is on the S&P that we prefer to use. Now, of course, again, the same thing will hold true for the individual stocks. You buy when you get a spike down in an uptrend. So let's take a look at something else. Let's see. And here is Alex Elder's new high, new low index, which we saw back in February when Alex sent us this chart, or similar one. And he pointed out, remember, that if we dropped all the way down here at minus 8,000 almost, if we broke above that minus 4,000 level, we're likely to have a nice trend. And of course, he was correct in that. Look at the trend we had. The new high, new low index continues to trend up, and the market, of course, is trending up with that. So I wanted to point this out. He is correct. He is correct once more. Let's take a look at something else. We'll take a look at one more chart this week, and that is the best choice chart showing us the regression channel. And recall that this is a 90% line, 50%, 10%. Right now, the spider, which is the S&P's, one of the S&P's ETFs, spider is now sitting at 40% within this range here. So we have room to grow to somewhere up to 70-80%. Now, so that's all for this week. The market still looks very bullish. Of course, we saw all of those indications on the charts. Yeah, it's always likely that we could get a pullback, we get a retracement. Markets don't go up all the time continually. So, but generally, every time frame we look at, monthly, weekly, and daily, is telling us that we should be on the buy side of this market. So have a nice weekend, and we'll do some of this again next week. Bye.